Hello traders, Gary Wagner with the gold forecast here on October the 21st, 2010. It is Thursday, about 7 a.m. here in Honolulu, Hawaii, and this is the daily report. Gold under fairly significant pressure this morning, continuing its downward slide on this retracement, currently trading down off about $21. On today's report, we're going to be looking at different levels of potential support and where we see this market in terms of whether or not it is a critical area right here, all on today's daily report. As you know, yesterday we did get a small but nice recovery as the market did come down off of this engulfing bearish. We had the doji and of course this one long sell-off day. We did yesterday get that piercing line. On my report yesterday, I talked about the fact that conservative traders absolutely need to wait for confirmation. Aggressive traders can go in and initiate a position. I did receive quite a few emails the other day asking me in terms of my trading style what I believed one should follow. At 56 years old, I have become a very conservative trader. What I tend to do is in a bull market, I will take a conservative stance to initiate the position and an aggressive stance to exit the position. In other words, attempting to lock in anytime I can. That being said, what are we looking at and where do we see this market going right now? What I'm looking at is this. This, of course, is an engulfing bearish. We have it's also called an outside trading day. But here's what I'm finding interesting. When we look at a couple of critical levels of support, and what I've done is I've created two Fibonacci retracements. One of the Fibonacci retracements is simply from the beginning of wave 3 to the top of wave 3, and what I do when I calculate that is I am looking at the 38% level, which is at 1227. If I run another Fibonacci retracement, and that is from the bottom of this impulse wave, in other words, when the market started moving right here, the bottom of C, all the way to the top, and then I do a Fibonacci retracement, the 38% level that we came up with, this 1227, for our shorter term is very, very close, as you can see, to this 23% level at 1331. So 1331, 1327, these areas right in here are absolutely critical areas in terms of it finding support. Now, the market is still trading, so we're not sure whether or not it will find support, but I can tell you this, it is currently trading below it, and this is a fairly critical area. Now, if the market can close above this one area, I believe that it's critical and it will find support. If it does not, the next real area of support is the 50% retracement area on our shorter term Fibonacci, which is that 1310 area. That's why I had mentioned in terms of aggressive traders, 1310 is an area that obviously should hold. I personally didn't think we would see it break this hard today, but gold never ceases to amaze me. Traders, as we speak and as we're doing this report, the market is continuing to trend lower. As you can see currently at 1318, 1319. What I am finding as a critical area is when we follow our Andrews pitchfork, and this is that 50% level, the middle of the handle, and if we follow that up, to me, now that is of course a moving support resistance area, but as you can see, it is just flirting with and trading just below that. So that when we look at these critical areas that I talked about, of course, this 1310 to the area that we're at right now is an absolutely critical area in terms of if the market is going to find support, if this retracement is going to be in any way, shape, or form a shallow retracement, it cannot really go beyond this 1310. If it does go beyond the 1310, it's absolutely not a shallow retracement anymore, and we are looking at a completely different set of circumstances and scenarios. That's that 1310 right in here. What we need to see is, on a closing basis, of course, where this market wants to end up. In fact, are we looking at something where it will tentatively flush out some of the longs, and due to the covering and squaring of positions, of course, drive the market down, find support, and then pop it up? Or are we going to move in for any kind of an extended retracement? When we take a look at the market on typical retracements that we have seen on a wave 3, because wave 3 tends to be the longest, you notice back here, this is that last time we had it. This is right after May. The actual retracement in terms of time cycle was 1, 2, 3, 4, 5, 6, 7 days. We are now in 1, 2, 3, 4, 5, the 6th day of this cycle. So to me, it's rather important in terms of a time cycle, how long it actually takes for this retracement to kind of work itself out. Traders, have gone ahead and really shrunk this chart down so we can take a look at the absolute big picture. The absolute big picture. Because anytime we're looking at a retracement like this, I believe that we need to put this all into perspective of what we've seen. When we take a look at the various tops of the markets that we've seen. This is that first record top back in December 2009, 1221. This wave 3 and wave 5, these are our new contract highs at 1265. 1265 and in the 1245 area. Of course, this is that final correction that we saw back in August and September, and then of course here the bottom or the beginning of this impulse phase. This no doubt is the strongest impulse phase I have ever seen. When we consider what the market's done in terms of sheer amplitude and time frequency, meaning how quickly it's gone up, it is not as severe as we saw when we had this 1221 area come up, because that was almost straight linear. This has more of an angle to it, but in terms of the moves itself, realize that we still have one more wave to go to the upside, that wave 5, before we hit our corrective phase. My sentiment is this: I need to take serious and pay serious attention, to what we see in this area. As I look at this roving 50% line, this Andrews pitchfork, if we can have the market close at or above this area, my sentiment is it will continue to follow this track higher. I personally think right now that we will be looking at one of the better opportunities once we shake out this market, we end this retracement. My sentiment is we're probably going to see one of the nicer buys that we've been enabled to see in terms of a market stance from the long side. Have I changed my long-term view on the market? Absolutely not. Do I believe that gold is headed higher interim term? Absolutely. Do I think that we're going to witness more in terms of this retracement here? We're going to need to see a couple of indicators come together. In other words, where is it going to actually find support in terms of a straight Fibonacci area, and then a candlestick signal that we find at the same time? Traders, the last thing that I want to look at today is to take a look at the type of retracement we saw on our last wave 3, and that was of course during this last impulse cycle right in here, which of course is 1, 2, 3, 4, 5 ABC. When I run a Fibonacci retracement, what I get, and I'm running it just simply from the beginning of wave 3 to the top of wave 3 right in here, what you'll notice is that it found an absolute bottom right here at about the 50% point, so that we are below our 38% point. And there's a couple of things that I do want to take note of, and that is typically in this market, when we have seen this market bottom out from these sizable retracements, whether it's this bottom of C here or these different points here, we tend to get a particular candle, and that is that long-legged doji. Right in here, this was a superlative play that we had. This was a long-legged doji. This right here is absolutely an inverted hammer. Another small doji here, another small doji here, and another small doji here. So when we take a look at these different areas, bottom of C here, we have a doji. Here, we have that consolidating candle. Here we have it, and here we have it. Even on this one, the subwave here, we also get this small bodied candle. My sentiment is what I really think we will look for in this market. Of course, we want to see where the market itself wants to find support. My sentiment is right now it should be just above or right in this one area, maybe 13.15, 13.12, somewhere in there. Conservative traders, we are waiting for that signal. I think that once we have that signal, we are going to have an excellent opportunity to enter at the bottom of the wave. Aggressive traders, for those of you who did enter the market, aggressive traders means an aggressive stance. Therefore, my suggestion is that when we initiate a conservative buy signal, you need to dollar cost average absolutely and look to ride that wave back up. Realize this. Typically on a fifth wave, we get about a move equal to the size of wave one. Wave one on this particular round was 100 in the same way that this wave one was about 100. So we might see a typical play or something very similar to what we saw right in here, which is we'll get this retracement 50%, and then we'll get a $100 move, and that will be the top of the impulse cycle. If in fact it plays out that way and the market goes to say 13.12, you're looking at 14.12 as a projected top. In other words, about a $100 move right in this area. This has been Gary Wagner, wishing you as always good trading, and we will talk to you tomorrow for the weekend review. Bye-bye.